This is Clark Neighbors with BIS Commodities with the market recap for the week ending August the 9th, 2019. Grains for the first week here in the last 3 to 4 weeks, give or take, had an upward week. Corn beans cents, beans up 25 cents roughly on the week, wheat up a dime. As I said previously, we've had three weekly lower markets. Commitment to trades report out this afternoon. Looks like funds liquidated 32,000 contracts of their longs. Wheat continued to be slightly short and added to shorts in the bean market. And currently the market is short 72,000 contracts of beans on Tuesday's close or tonight's commitment to traders report. Saw some liquidation. Cattle length down to 23,000, an increase in hogs, and an increase also in length in the crude oil with a wild week. In general, two or three themes going on right now. Not in order of necessarily. Trade issues obviously have been a very big issue in the last week or so in regards to adding a lot of volatility in the market, not only with the commodity world, but with treasuries, interest rates, the effect on the Dow. So we've seen some major influence come into our markets from the macro side of things, which is always concerning and can have some changes above and beyond what the market's wanting to trade. I think we saw some of that late last week, early this week with the trade situation or the trade war with China. And listening to Peter Navarro on CNBC this afternoon, it looks like this could take quite a while. I think the U.S. has taken a very hardline stance on this, the way it looks. And, this could linger. It doesn't seem like there's much progress being made or want to be made at this point. The highlight this week, though, was led by soybean oil, kind of on this Chinese situation. Actually, soybean oil closed highest level since April. Last 2 days, we've seen a big increase in soybean oil. Some exports out of Argentina into China got the market moving. So keep in mind with the African swine flu in China right now, thus less need for soybeans to crush into meal for feed production or protein for the hogs. Also, because of that, there's less bean oil for human consumption. So we've seen an increase in soybean oil and also palm oil in the world markets here the last 2 to 3 days especially. And again, bean oil highest level since April. In the cash markets this week, as far as corn, depending on where you're at, early in the week saw some pretty strong basis levels, especially in the east. Seems to be ramping itself up again as we approach harvest. And interestingly enough, we keep some basis history at BIS Commodities, and looking at corn basis back in February, March, April, kind of that late winter, early springtime, we were at, in almost every market, 5-6 year lows on corn basis. When everything turned and you got the availability of supply to lighten as you got into the summer months, and as a producer couldn't sell in grain, the basis levels went to the highest values we've seen in 5 years, and we've seen that especially in the east, but many other locations throughout the Midwest, especially in the domestic processing market. We'll see how that goes forward, but interestingly enough, if you tie that in with barge freight or the cost of transportation on the river market to the Gulf of Mexico, it's very expensive right now. Everybody's wanting freight today to move product out that's been wanting to move because of the river issues over the last several months. But interestingly enough, freight values in the harvest time or in fall are the lowest levels we've seen in quite some time, and also a lot lower than we typically see in that harvest time window, which I think also explains not only the upfront is high because of the logistical issues of the river most of the winter and the spring and early summer, slowing things down. It also shows that exports are not very good in the fall market when you see that kind of cheap barge freight. So we'll see how that transcends as we go into harvest. So all in all, a lot of concentration in the market about crop report from the USDA, from several different sources. So you're going to have NASS putting out a recalculation on acres. That comes from NASS. The FSA is going to put out numbers on prevent plant, which obviously theoretically will tie into the planted acres, thus giving us a harvested acre, which is the most important. And then lastly, WASDE will be putting out a supply and demand update. So there's a lot of numbers coming out Monday. The main ones to keep in mind: planted acres on corn, average trade guess is 88 million acres. Harvested average trade guess is 80 million acres. Average yield estimates were at 165. As far as the beans, average trade guess again 81 million acres, harvested around 80 with a 47.6 yield. We'll see what the USDA says. That will give us at least some basic point going forward, but there's a lot of anticipation, a lot of numbers on that report. It's a strange year, strange growing season. It still will not put all the pieces of the puzzle together, but it will give us a starting point going forward as we get in the harvest time frame. As far as that, the other things to keep in mind going forward, any type of supply rally that could come into this market going forward. Keep in mind the headwinds of the demand are very big. As I mentioned earlier on the tariffs, the cheaper product in South America. Those are key things as we go forward. So any type of rally could be diminished somewhat with the demand sector we're in at current levels. If you have any questions on any of these markets, and keep in mind we have the macros being affected by everything else too, feel free to give us a call if you want to talk on any thoughts or ideas. Phone number is 800-373-2525. Catch us on the web at BIScommodities.com. With that, everyone, have a great weekend.